Just last week, I was scrolling through my phone when I got a notification that completely blew my mind. SpaceX had just launched their 400th mission, and I started doing some quick math in my head. Each launch cost customers anywhere from $60 to $90 million. That's when it hit me like a freight train. This one company is generating over $13 billion a year, just from shooting rockets into space. But here's the absolutely crazy part that most people have no clue about. While everyone's been arguing about electric cars and artificial intelligence, something much bigger has been happening right above our heads. And it's about to change everything we know about business, investment, and the future of human civilization. See, while you were sleeping last night, over 11,000 satellites were spinning around Earth at 17,000 miles per hour, beaming down internet signals, taking pictures, providing GPS coordinates, and generating more revenue than the entire GDP of most countries. The private space economy has quietly grown into a $570 billion industry. That's bigger than the entire economy of Sweden, bigger than Belgium, bigger than most nations you can think of, and according to every major financial institution from Goldman Sachs to McKinsey to Morgan Stanley, we're looking at a $1.8 trillion market by 2035. That's not a typo, and that's not some pie-in-the-sky projection. We're talking about an industry that could become larger than the entire global automotive sector in just over a decade. What makes this story even more incredible, and what most people completely miss, is that this isn't being driven by governments anymore. For the first time in human history, private companies now account for 78% of all space economic activity. Think about that for a second. The same frontier that was once the ultimate symbol of national power, the same space that required the resources of entire superpowers, is now dominated by entrepreneurs, venture capitalists, and companies that didn't even exist 20 years ago. We're witnessing the complete commercialization of the final frontier, and most people are absolutely missing the biggest economic transformation of our lifetime. The numbers are so staggering they almost don't seem real. In 2020, there were about 3,400 satellites orbiting Earth. That was already a lot, right? Well, by the end of 2024, that number had exploded to over 11,500 satellites. We more than tripled the number of objects in space in just 4 years. But here's the kicker. These aren't government science projects anymore. These are money-making machines, revenue-generating assets spinning around our planet 24 hours a day, 7 days a week. SpaceX's Starlink constellation alone generates $8 billion annually, and they're launching 60 new satellites every few weeks like it's no big deal. Amazon is spending $10 billion on their own satellite internet system, called Project Cooper. These companies aren't just launching satellites for fun or scientific prestige. They figured out how to make space incredibly, unbelievably profitable. But the satellite internet story is just the tip of the iceberg. The space economy has evolved into something far more complex, sophisticated, and lucrative than most people could ever imagine. We got companies seriously planning to mine asteroids for platinum, worth more than an entire country's GDP. We've got orbital factories manufacturing products in zero gravity that literally cannot be made on Earth. We've got space tourism companies charging for $150, zero for a 10-minute flight to the edge of space, and having wealthy people line up around the block to pay it. We've got venture capitalists pumping $26 billion annually into space startups, desperately hunting for the next SpaceX, the next billion-dollar space unicorn. This entire transformation started with one man's completely crazy idea that everyone said would never work. Back in 2002, Elon Musk had just sold PayPal to eBay for $1.5 billion and was thinking about what to do with his newfound fortune. Most people would buy sports teams, tropical islands, or massive yachts. Musk decided to buy rockets. But when he started researching the launch industry, he discovered something that completely shocked him. It cost $10,000 to put a single kilogram in orbit. That's like paying $10,000 to mail a laptop computer. The entire industry was completely stuck in the 1960s, using throwaway rockets that cost hundreds of millions of dollars and could only be used once before being thrown into the ocean. So Musk did what any completely rational person would do. He started a rocket company in a warehouse in El Segundo, California, with $100 million of his own money and a team of engineers who had never actually built rockets before. Everyone in the aerospace industry said he was absolutely insane. The rocket business was dominated by massive defense contractors like Boeing and Lockheed Martin, companies with decades of experience, billions in government contracts, and relationships that went back to the Cold War. What could some Silicon Valley entrepreneur who made his money from internet companies possibly know about rocket science? The experts laughed, the media mocked him, and even his own friends thought he was throwing his money away. Well, as it turns out, quite a lot. SpaceX's revolutionary breakthrough wasn't just building rockets, it was proving that rockets could be reusable, like airplanes. They figured out how to land rocket boosters back on Earth and fly them again. Something that sounds simple, but is actually like trying to catch a falling pencil while riding a motorcycle blindfolded during an earthquake. The engineering challenges were absolutely insane, but the economics were revolutionary. Instead of throwing away a $60 million rocket after one use, SpaceX could use the same rocket 10, 15, even 20 times. This single innovation dropped the cost of launching stuff to space from $10,000 per kilogram to around $1,700. and they're currently targeting cost below $100 per kilogram with their new Starship system, which would make space access cheaper than most people's monthly cell phone bills. This cost reduction changed absolutely everything about the space industry. Suddenly, companies that could never afford space access started launching satellites. University students could build CubeSats and get them into orbit for less than $100,000. Startups could deploy entire satellite constellations for internet, Earth observation, and communications without needing government funding. The barriers to entry completely collapsed, and entrepreneurs flooded into space like prospectors rushing to California during the gold rush. But SpaceX's real business genius wasn't just cheap launches, it was something called vertical integration. While traditional aerospace companies buy components from suppliers all around the world, creating complex supply chains and dependencies, SpaceX builds almost everything in-house. Engines, avionics, structures, spacecraft, even the software. They control the entire supply chain from raw materials to finished rockets. This gives them incredible cost advantages and quality control, but it also creates multiple revenue streams that reinforce each other. They're not just a launch company anymore. They're a satellite internet provider with Starlink, bringing in billions in monthly subscription revenue. They're a spacecraft manufacturer with Dragon, carrying astronauts to the International Space Station. Soon they'll be offering point-to-point transportation around Earth with Starship, potentially flying passengers from New York to Tokyo in 30 minutes. The financial results speak for themselves in ways that should make every investor pay attention. SpaceX is now valued at $350 billion, making it the second most valuable private company in the entire world, behind only TikTok's parent company ByteDance. They're generating over $13 billion in annual revenue, with $8.2 billion coming from Starlink alone. That's more revenue than companies like Netflix, Spotify, or most traditional aerospace companies. And here's the part that should really blow your mind. Starlink is now cash flow positive, meaning it generates more money than it spends on operations and expansion. SpaceX has definitively proven that space-based businesses can be massively profitable, not just expensive experiments that burn through investor money. But while SpaceX was revolutionizing the launch industry with Silicon Valley speed and aggression, Jeff Bezos was taking a completely different approach with Blue Origin. Founded in 2000, 2 years before SpaceX, Blue Origin has been methodical, secretive, and focused on what Bezos calls step-by-step, ferociously. Where SpaceX moves fast and breaks things, taking risks and iterating quickly, Blue Origin takes the tortoise approach, slow but steady wins the race. Build strong foundations before scaling rapidly. Blue Origin's philosophy reflects Bezos' long-term thinking that made Amazon successful. Build incredibly strong foundations, prioritize safety and reliability over speed, and prepare for massive scale over time rather than rushing to market with minimum viable products. They've been developing their New Glenn rocket for years in relative secrecy, and it finally reached orbit successfully in January 2025. While SpaceX has been launching satellites and astronauts to the International Space Station for years, Blue Origin is just now entering the orbital launch game where the real money gets made. But don't count Jeff Bezos out for a second. The man has committed to selling $1 billion of Amazon stock annually to fund Blue Origin, giving them virtually unlimited capital for research and development. That's more money than most countries spend on their entire space programs. They're not just building rockets, they're developing lunar landers for NASA's Artemis moon missions, planning commercial space stations called Orbital Reef, and investing heavily in space manufacturing technologies. Blue Origin represents a patient, incredibly well-funded approach that could pay off massively in the long term, especially as the space economy matures and reliability becomes more important than being first to market. The competition between SpaceX and Blue Origin illustrates something really important about the space economy that most people miss. There are multiple ways to win, and the market is so enormous that several companies can succeed simultaneously with completely different strategies. SpaceX succeeded with rapid iteration, aggressive marketing, and Silicon Valley-style risk-taking. Blue Origin is betting on methodical development, patient capital, and Amazon-style long-term thinking. Both approaches can work because the addressable market is absolutely massive and growing exponentially. Beyond the big names that everyone talks about, dozens of companies are carving out specialized niches and building sustainable businesses that most people have never heard of. Rocket Lab has revolutionized small satellite launches with their Electron rocket, charging premium prices for dedicated rides to precise orbits that larger rockets can't efficiently serve. Planet Labs operates over 100 small satellites, providing daily global Earth imagery for agriculture, environmental monitoring, and commercial intelligence. Virgin Galactic is pioneering space tourism with suborbital flights that cost $450,000 per seat, but are completely sold out with waiting lists. Each company found a different way to make money in space. The diversity of business models shows how much the space economy has matured beyond just launching rockets. Companies are building integrated space-to-Earth services that generate revenue from data, communications, manufacturing, and experiences. The space economy is becoming as complex and varied as the terrestrial economy, with companies specializing in everything from space insurance to orbital debris removal to zero gravity, pharmaceutical manufacturing. What's driving all this explosive growth? 3 fundamental changes have created perfect conditions for space commerce that didn't exist even 10 years ago. First, launch costs have absolutely plummeted thanks to reusable rockets and increased competition. Second, technology miniaturization means incredibly powerful satellites can be built quickly and cheaply using smartphone components. Third, private capital has flooded into the sector as investors realize they're looking at the biggest market opportunity since the internet. The investment numbers are absolutely mind-blowing when you really dig into them. In 2020 alone, private investors pumped $26 billion into space ventures. That's more money in 1 year than some entire industry see in decades. Since 2009, over $338 billion has been invested across more than 2,000 space companies worldwide. That's more capital than most people can even comprehend. And it's all flowing into an industry that barely existed commercially 20 years ago. Venture capitalists who made their fortunes in software companies and internet startups are now betting huge portions of their portfolios on space companies. The employment impact tells an equally impressive story about real economic value creation. Space sector jobs have grown 27% over the last decade, compared to just 14% for the overall private sector. These aren't just any jobs, they're incredibly high-paying careers. With an average salary of $135,000, nearly double the national average of around $73,000, the space economy is creating well-paid, high-skilled employment at a rate that absolutely destroys the broader economy. Information security analyst positions are projected to grow 30% over the next 8 years, driven largely by space industry demand for cybersecurity and data analysis expertise. But perhaps the most exciting part of the space economy isn't what's happening today, it's what's coming next, and the opportunities are absolutely staggering. Satellite internet is just the beginning of what's possible when you have reliable, cheap access to space. Companies are planning orbital factories that take advantage of zero gravity and vacuum conditions to manufacture products that are literally impossible to make on Earth. Imagine producing perfect crystals for semiconductors that have no defects, because gravity didn't interfere with their formation. Think about creating pharmaceutical compounds that can only form in microgravity, potentially leading to breakthrough treatments for cancer and other diseases. These products could be worth millions of dollars per kilogram, easily justifying the cost of space-based manufacturing. Then there's asteroid mining, which sounds like pure science fiction but is rapidly becoming science fact, with real companies raising real money to make it happen. A single metallic asteroid could contain more platinum than has ever been mined in all of human history. Some near-Earth asteroids are estimated to contain trillions of dollars worth of precious metals, rare earth elements, and other materials that are becoming increasingly scarce on Earth. Companies like Astroforge and Planetary Resources aren't just dreaming about this. They're actively developing the robotic technology to mine these space rocks and return valuable materials to Earth. The economics of asteroid mining are absolutely compelling when you run the numbers. Platinum sells for about $30,000 per kilogram on Earth, and a single small asteroid might contain thousands of tons of it. If you can mine even a tiny fraction of that and return it to Earth, the profit margins will be absolutely enormous. But the real long-term opportunity might be using asteroid materials in space, rather than bringing everything back to Earth. Water from asteroids can be split into hydrogen and oxygen, rocket fuel. Construction materials could support massive space stations and lunar bases. A space-based economy that doesn't depend on launching every single thing from Earth's deep gravity well could be far more sustainable and profitable than anything we can imagine today. Space tourism represents another emerging market that's already generating real revenue and could explode into something much bigger. Virgin Galactic has flown dozens of paying customers to the edge of space for $150,000 per ticket, with passengers including celebrities, entrepreneurs, and even ordinary people who saved up for years to afford the experience. Blue Origin offers similar suborbital flights, while SpaceX provides multi-day orbital experiences for ultra-wealthy customers willing to pay $50 to $70 million for a week in space. These aren't just joyrides, they're the early stages of what could become a massive travel and entertainment industry. The space tourism market is small today, but it's growing incredibly rapidly as costs come down and capacity increases. Virgin Galactic has sold about 800 tickets, representing $107 million in future revenue. As reusable rockets make space access cheaper and companies develop larger passenger vehicles, space tourism could evolve from a billionaire's hobby to a significant travel industry serving millions of people. Some analysts project the space tourism market growing from $600 million today to over $7 billion by 2030. And that might be conservative if breakthrough technologies like SpaceX's Starship make space travel as routine as international flights, but the most transformative aspect of the space economy might be how it's changing and improving life here on Earth in ways that most people never even think about. Your smartphone's GPS depends on a constellation of satellites that provide positioning accurate to within a few meters anywhere on the planet. Weather forecasting relies on space-based sensors that track storms and atmospheric conditions in real time. Global communications use satellite networks that connect remote areas and provide backup systems when terrestrial infrastructure fails. Financial markets depend on satellite timing signals for high-frequency trading. That happens in milliseconds. Modern agriculture uses satellite imagery for precision farming that optimizes crop yields while reducing water and fertilizer usage. The space economy isn't just about what happens to 100 miles above our heads. It's about enabling new capabilities and efficiencies that transform entire industries on Earth. McKinsey estimates that space-enabled services can have a total economic impact of $3.3 trillion by 2030. This includes everything from autonomous vehicles that need constant satellite connectivity to navigate safely, to IoT devices that monitor critical infrastructure in remote locations, to environmental monitoring systems that track climate change and natural disasters in real time. The satellite internet revolution perfectly illustrates this dynamic between space infrastructure and terrestrial economic development. SpaceX's Starlink provides high-speed internet to rural areas that traditional cable and fiber companies won't serve because it's not profitable to run cables to remote locations. This isn't just about entertainment or convenience. It's a fundamental economic development and opportunity. Reliable internet access enables remote work, online education, telemedicine, and e-commerce in areas that were previously completely isolated from the digital economy. The economic multiplier effects can be absolutely enormous, as entire regions gain access to global markets and opportunities. But Starlink is just the first wave of what's coming. Amazon's Project Kuiper will deploy over 3,100 satellites for global internet coverage, directly competing with Starlink while potentially driving prices down and service quality up. OneWeb operates 650 satellites focused on enterprise and government customers who need guaranteed service levels and specialized capabilities. Multiple countries, including China and India, are developing their own satellite internet systems. 4. Strategic independence and domestic economic development. We're rapidly moving toward a world where high-speed internet is available literally anywhere on Earth via space-based infrastructure that never goes down and never gets damaged by natural disasters. The business models for satellite internet are fascinating and show how space companies can serve global markets while adapting to local economic conditions. Starlink charges $120 monthly in the United States, but adjusts pricing dramatically. For different markets, 40 euros in France, 50 euros in Germany, much less in developing countries. This isn't positioned as mass-market consumer internet competing with fiber connections, but as premium connectivity for underserved areas, mobile applications like ships and airplanes, and backup systems for critical infrastructure. The financial performance validates that these business models actually work in the real world. Starlink generated $8.2 billion in revenue in 2024, literally double the previous year's performance. The service is now cash flow positive with $3.8 billion in EBITDA, proving definitively that space-based services can generate substantial profits, rather than just burning through investor money indefinitely. This success is attracting massive investment from other companies and creating a virtuous cycle of competition and innovation. What makes the space economy particularly interesting from an investment perspective is how it combines very long-term infrastructure investments with immediate revenue generation opportunities. Building a satellite constellation costs billions of dollars upfront and takes years to deploy. But once operational, it can generate steady cash flows for decades with relatively low marginal costs. The capital intensity creates significant barriers to entry that protect successful companies. But those same companies can build incredibly defensible competitive positions. Once they achieve scale, the regulatory environment is evolving rapidly to support this growth, though not without challenges and controversies. The Federal Aviation Administration now processes over 150 commercial launches annually, compared to fewer than 10 launches per year just a decade ago. Licensing timelines have been dramatically streamlined, export controls have been modernized to allow more international cooperation, and entirely new frameworks are being developed for emerging activities like asteroid mining and orbital manufacturing. Governments around the world recognize that commercial space leadership is becoming strategically and economically important for national competitiveness. International competition is intensifying as more countries recognize the strategic and economic importance of space capabilities. China is rapidly developing commercial space capabilities and planning massive satellite constellations that could compete directly with American systems. India targets capturing 9% of the global space market by 2030 and projects building a $100 billion domestic space economy by 2040. Europe is investing heavily in space technology and commercial partnerships to reduce dependence on American companies. The space economy is becoming a key arena for international economic competition, similar to how semiconductor manufacturing and artificial intelligence have become strategic priorities. This creates both tremendous opportunities and significant risks for investors willing to bet on space companies. The global market is expanding rapidly, creating room for multiple winners, but competition is increasing just as quickly. First-mover advantages can be extremely significant in space because of the capital intensity and technical barriers, but technological and regulatory risks are substantial. Long development timelines and enormous capital requirements mean that space investments often require patient capital and sophisticated risk management that most retail investors aren't equipped to handle. The venture capital ecosystem has adapted to these unique realities of space investing. Specialized space VC firms like Space Capital and Seraphim Space have emerged alongside traditional Silicon Valley firms that are investing heavily in space companies. The funding ranges from relatively small seed investments in satellite component manufacturers to billion-dollar bets on rocket companies and satellite constellations. The risk-return profiles vary enormously depending on the specific sector and development stage. Recent valuations demonstrate strong investor confidence, but also highlight the speculative nature of some space investments. SpaceX at $350 billion makes it worth more than most Fortune 500 companies despite being privately held. Firefly Aerospace reached a $2 billion valuation after raising $175 million, despite having limited operational history. Numerous other companies have achieved unicorn valuations, based more on potential than proven business performance. These valuations reflect massive expectations about future market growth and competitive positioning that companies will need to meet with actual results. The success stories are genuinely compelling and have created enormous returns for early investors who saw the potential before it became obvious. SpaceX has generated massive returns for early backers, including Founders Fund and Draper Fisher Jurvetson. Rocket Lab went public and provides investors with exposure to a profitable, growing space business. Planet Labs has built a sustainable Earth observation business that generates recurring revenue from data services. But there have also been notable failures and disappointments that remind everyone that space investing involves real risks. Several space SPACs have dramatically underperformed their initial projections, and some highly promoted companies have struggled to meet revenue targets or technical milestones. What's particularly interesting about successful space companies is how they're building integrated business models that combine multiple revenue streams, rather than depending on a single product or service. SpaceX leverages launch services revenue to fund satellite constellation deployment, which generates subscription revenue that funds Mars exploration technology development. Blue Origin sells rocket engines to competitors while developing their own launch vehicles and space stations. Rocket Lab evolved from pure launch services to spacecraft manufacturing, satellite components, and mission management services. This integration helps companies weather market volatility and creates multiple paths to profitability, but it also raises fundamental questions about vertical integration versus specialization in the space economy. Some companies are trying to control entire value chains from raw materials to end customers, while others focus on specific niches and partner with other companies for complementary capabilities. Both approaches can work, but they require different types of management expertise and capital allocation strategies. The space manufacturing sector represents perhaps the most futuristic and potentially transformative aspect of the current space economy. Companies like Varda Space Industries are building autonomous spacecraft that manufacture products in orbit and return them to Earth, creating entirely new categories of high-value goods. The business model focuses on products that justify space-based production costs through superior quality or capabilities that are impossible to achieve on Earth. Microgravity enables manufacturing processes that are literally impossible in Earth's gravity field. Fiber optic cables produced in space have superior optical properties because molten glass doesn't settle or develop bubbles. Pharmaceutical crystals grown in zero gravity are significantly larger and more perfect than terrestrial equivalents, potentially leading to more effective drugs. Advanced alloys can be created with material combinations that gravity would prevent from mixing properly. Semiconductor crystals can be grown with perfect structures that eliminate defects and improve performance. The addressable markets for these space manufactured products can be absolutely massive. A kilogram of perfect pharmaceutical crystals might be worth over $1 million, easily covering launch and manufacturing costs while generating substantial profits. Specialized optical fibers for quantum computing and ultra-high-speed communications could command premium pricing from technology companies. Advanced materials for aerospace and electronics applications could justify space-based production for performance-critical applications where cost is less important than capability. But scaling orbital manufacturing from experimental demonstrations to industrial production requires enormous infrastructure development that will take decades to build out. Companies need reliable transportation systems, orbital power generation, raw material supply chains, quality control systems, and waste management, all operating in the incredibly harsh environment of space, where repair and maintenance are extremely difficult and expensive. This represents a long-term build-out comparable to developing terrestrial manufacturing centers, but with much higher technical complexity and capital requirements. The timeline for space manufacturing commercialization reflects the broader development cycle of space businesses, where near-term opportunities often focus on niche, high-value applications that gradually expand into larger markets. Near-term possibilities include specialty pharmaceuticals and advanced materials that can justify high production costs. Medium-term development could enable larger-scale production for space-based customers like satellite manufacturers and space stations. Long-term possibilities include manufacturing for terrestrial markets at industrial scale, potentially producing goods in space that are then shipped back to Earth. Earth observation represents one of the most immediately profitable and fastest-growing space sectors, with business models that are already proven and scalable. Planet Labs operates over 100 small satellites providing daily global imagery that serves customers in agriculture, government, finance, and environmental monitoring. Maxar contributes over 1.2 billion square kilometers annually to the world's largest commercial imagery archive. These companies aren't just taking pictures from space, they're providing sophisticated data services and analytics that help customers make better decisions and optimize operations. The business models are remarkably sophisticated and demonstrate How space-based services can create significant value for terrestrial customers. Agricultural customers use satellite data for precision farming, optimizing irrigation and fertilization schedules while predicting crop yields weeks or months in advance. Insurance companies assess disaster damage in real time and monitor risk exposure across their entire portfolios. Government agencies track compliance with environmental regulations and monitor potentially hostile activities around the world. Financial firms analyze economic activity through indicators like parking lot occupancy, shipping traffic, and construction activity that provide early signals about economic trends. Artificial intelligence integration multiplies the value of satellite data exponentially by automating analysis that would otherwise require thousands of human analysts. Machine learning algorithms can automatically detect changes in land use, identify specific types of vehicles and infrastructure, and generate actionable insights from massive amounts of imagery data. This combination of global surveillance capabilities and artificial intelligence creates unprecedented situational awareness that was impossible just a few years ago. The Earth observation market benefits from relatively predictable demand patterns and high switching costs once customers integrate satellite data into their core operations and decision-making processes. This creates opportunities for recurring revenue relationships and strong customer retention rates. The main challenges are satellite replacement cost as older spacecraft reach end of life, and increasing competition as barriers to entry continue, falling due to lower launch costs and standardized satellite components. Space debris removal represents an emerging market that's driven by environmental necessity, rather than pure profit opportunity, but it's becoming economically viable as the problem becomes more severe. With over 11,000 operational satellites and thousands of pieces of dangerous space junk traveling at 17,000 miles per hour, orbital collisions are becoming a serious threat to all space activities. The space debris removal market is projected to grow from $100 million in 2023 to $600 million by 2028 as the problem becomes more urgent and solutions become more cost-effective. Companies like ClearSpace and Astroscale are developing sophisticated robotic technologies to capture and safely deorbit defunct satellites and dangerous debris. The business model initially focuses on government contracts for removing high-priority debris that poses the greatest threat to operational spacecraft, but could eventually expand to commercial satellite servicing, life extension, and orbital recycling services that extract value from space junk rather than just disposing of it. The regulatory framework for debris removal is still evolving, but the technical and economic logic is becoming compelling as space gets more crowded. Orbital debris threatens all space activities regardless of which country or company operates them. So there are strong incentives for international cooperation and shared funding of removal efforts. The main challenge is developing cost-effective technologies that can safely capture and dispose of objects traveling at incredible speeds in the harsh environment of space. Private space stations represent the next major phase of orbital infrastructure development that could enable entirely new categories of space-based economic activity. As the International Space Station approaches retirement after more than 2 decades of operation, companies like Axiom Space and VAST are developing commercial replacements that aren't just research facilities but are designed as multi-purpose platforms for manufacturing, tourism, research, and business operations that can operate profitably without depending entirely on government funding. Axiom Space is building pressurized modules that will initially attach to the existing International Space Station before separating to become an independent commercial space station. VAST is developing artificial gravity stations using rotating structures that could provide more Earth-like conditions for long-duration stays, potentially making space habitation more comfortable and sustainable for commercial applications. Both approaches aim to create economically sustainable space destinations that can support a diverse mix of customers and revenue streams. The business models for commercial space stations combine government anchor tenancy with commercial services in ways that should be familiar to anyone who understands real estate development. NASA and other space agencies provide baseline revenue through crew transportation contracts and research facility leases that cover basic operating costs. Commercial customers pay premium rates for specialized manufacturing space, exclusive tourism experiences, and unique research capabilities that aren't available on Earth. The goal is diversified revenue streams that support long-term financial sustainability without requiring continuous government subsidies. The investment implications of commercial space stations are significant because these represent billion-dollar infrastructure projects with decades-long payback periods and enormous potential upside if they succeed. Success could create extremely valuable real estate in space and enable entirely new categories of business activity that generate recurring revenue for decades. Failure could result in massive write-offs that set back commercial space development by years and make investors much more cautious about funding similar projects. The space insurance market reflects both the tremendous opportunities and substantial risks inherent in commercial space development. The market is projected to grow from $2 billion in 2025 to $7 billion by 2033, driven by increasing launch frequency, larger satellite constellations, and growing commercial space activities that require risk management. Launch insurance remains the dominant segment because rocket launches are still relatively high-risk events despite improving reliability. But satellite insurance is growing rapidly as more companies deploy expensive spacecraft. Insurance pricing serves as an independent market-based assessment of space business risks and opportunities. SpaceX's track record of successful launches has significantly reduced insurance costs for their customers, while new entrants and experimental technologies still face high premiums that reflect uncertainty about their reliability. The insurance market provides valuable signals about which space technologies and business models are becoming mature and which ones are still experimental. The space economy's growth trajectory suggests it will become an increasingly important driver of global economic development over the next decade. Satellite constellations will provide ubiquitous connectivity and data services that enable new applications and business models. Space manufacturing will create products with superior performance, characteristics that justify premium pricing. Resource extraction from asteroids and the moon could provide materials for both space-based activities and terrestrial applications, potentially revolutionizing resource availability and pricing. The companies and countries that position themselves effectively in this emerging economy may gain competitive advantages that persist for generations, similar to how early leadership in maritime exploration, railroad development, or internet infrastructure created lasting economic benefits. The space economy represents not just a new business sector, but the beginning of humanity's transition from a single-planet civilization to a spacefaring species with permanent economic activities throughout the solar system. The investment opportunity is clear for those willing to accept the risks and timelines involved, but so are the substantial challenges that could derail individual companies or slow overall market development. The space economy offers tremendous growth potential and breakthrough technological possibilities, but it requires patient capital, sophisticated risk management, and deep technical understanding that most traditional investors lack. The key insight is recognizing that space investment isn't a single bet on one technology or company, but exposure to a diverse ecosystem of companies pursuing different opportunities with vastly different risk-return profiles and development timelines for individual investors. The space economy offers several access points depending on risk tolerance and investment sophistication. Public companies like Rocket Lab provide direct exposure to profitable space businesses with transparent financials and regular reporting. Space-focused ETFs offer diversified portfolios of aerospace and satellite companies that reduce single company risk. Private investment opportunities exist for accredited investors willing to accept higher risks and longer holding periods for potentially higher returns, but these require significant due diligence and risk management capabilities. The broader economic implications of space economy development extend far beyond investment returns or even the space industry itself. The space economy is driving fundamental innovations in manufacturing processes, communication technologies, data analysis techniques, and international cooperation frameworks that have applications throughout the terrestrial economy. Technologies developed for space often create spillover benefits that improve productivity and capabilities in completely different industries. Perhaps most importantly, the rise of the private space economy represents something much larger than just a new business sector or investment opportunity. It's the beginning of humanity's fundamental transition from a single-planet species to a spacefaring civilization with permanent settlements and economic activities throughout the solar system. The economic incentives are finally aligning with technological capabilities to make this transition not just possible, but inevitable and profitable. The companies building today's space economy aren't just creating businesses or generating investment returns, they're laying the foundation infrastructure for humanity's expansion. Throughout the solar system, they're building the transportation networks, communication systems, manufacturing capabilities, and resource extraction technologies that will support permanent settlements on the moon, Mars, and eventually throughout the solar system. This infrastructure development is happening faster than most people realize and will create opportunities that we can barely imagine today. This transformation is accelerating rapidly as costs continue falling and capabilities continue improving. The same space that once symbolized the ultimate frontier accessible only to superpowers is becoming a bustling marketplace where entrepreneurs compete to serve customers and generate profits. The final frontier isn't just about exploration and scientific discovery anymore. It's about economics, opportunity, and the next chapter of human civilization that will be written in stars. The private space economy revolution has already begun, and it's gaining momentum every day as more companies achieve profitability, more investors recognize the opportunities, and more technologies mature from experimental to operational. The question isn't whether this transformation will succeed, but how quickly it will reshape our understanding of what's possible when human ingenuity, technological capability, and economic incentive align to push the boundaries of the possible. The future is being built in space right now, and understanding this transformation will be essential for anyone who wants to participate in the next phase of human economic development that extends far beyond Earth.